right, I'm joined now by Steve Krause, Benzinga's Newsmaster General. What up, sir?
Good morning, good Monday. How are you, Spence?
I'm okay. How are you?
Yeah, I'm not bad.
Remember, it's a short trading week.
It is. Yes, we got Good Friday on Friday, which is, So make the most of these next 4 days.
That being said, Steve, we do have some breaking news, I guess, in the last hour. Not so breaking anymore, but our long international nightmare.
Oh my God! It's been the inspirational story of 2021. It's been the feel good story on social media. Everyone knows it. Everyone loves it. Bodie McBoatface, the Ever Given ship caught in the Suez Canal, is freed. It's freed and it's moving.
She's free.
She's free. She's free.
Excellent. Yep. So global trade can go back to the way it was, right?
Yep. So the update right now is that it's moving and that it's going to take about 7 days to
7 days.
7 days to 7 days to clear the congestion from all the backed up boats. Yeah, it itself. I don't know if that boat's ever going through the Suez Canal after this.
Anna says put it back. I kind of agree.
Yeah, put it back. I agree.
All right, so 7 days to clear the congestion, and then global trade will go back to
correct. And crude slipped on that. You can kind of see. It was around 9 a.m. I think it was announced crude slipped about $1 on that. Makes sense, but just general commerce is going to go back to normal.
Yes, 13. This whole thing was a bullish wedge. That's this entire pattern, this entire week. When did it get stuck? It was like last Monday, last Tuesday, or was it before that?
I don't know. I believe it's been about a week, maybe a little bit more than a week. Yeah.
All right. So crude slipped on that. Everyone go back to your business, right? Nothing to see.
I know. Right. Now we'll have to look for something else.
That's a shame. All right.
I know.
Well, no more Suez Canal fun, but we have other headlines. What else are you seeing out there?
Yeah. So Friday we were seeing this big liquidation in the markets. These enormous block trades on Friday, and we kind of got word over the weekend what was happening. Credit Suisse, Numana. So there's this I don't know how to pronounce this, Archegos hedge fund.
I've been saying Archegos. I don't
Archegos.
Yeah, okay. The way to pronounce it either. I'm going with it.
So the Archegos hedge fund was liquidating because they got margin called basically.
Yeah.
And so they were they were just dumping shares on Friday. And these were block trades that, we see block trades, we see big block trades. These were big block trade. These are trades that no one's, not normal to see, 30 million shares in a company, billions of dollars in block trades. It was like every hour we're seeing billions of dollars in block trades. And now we know why.
So the stocks that are like sort of at the center of this, Viacom, Discovery.
Viacom was halted on Friday. Can you believe that?
Yeah, I can believe that. I mean, look at.
But if you think of movers and companies that get traded, stocks that get traded enough to get halted, Viacom is not high on the list.
Right. Well, that's the thing is like. If you zoom out, this made no sense right here. All that,
true.
And all the way up, we were like, "What the hell?"
That's very true.
Who's doing this? Well, now we know that you had this family office that was using swaps and levered up 5-1, bidding up stocks like Viacom and Pulp Discovery because they look the same. They look identical, and use it. So not just levered up, but using swaps to hide their position, so they didn't have to report a 13F filing. And sometimes all it takes is one domino to fall. In this case, the domino appears to have been the Viacom stock offering.
Yep.
And next thing you know, you get margin called, and your banks like Nomura, which is NMR, which is down big time today, and Credit Suisse, which is also down a lot today, they say, okay, you can't give us money, we're going to go into your account and sell for you, and that's what happens. And at least you get like other banks like Deutsche Bank came out and said we were much better with our risk management than those other guys were. We didn't.
Mhm.
So like we're way less exposed. Deutsche Bank is down 3% today. I mean, all the banks are down, but you see like Goldman Sachs, which is in the thick of the selling on Friday, and Morgan Stanley, which is doing a lot of selling.
Yep.
They're down. I mean, they're up relative to Nomura and Credit Suisse, and those two banks are gonna
They're gonna take a real hit. I mean,
figure out what were your risk people doing.
yeah. I mean, the figure right now we're looking at is $30 billion in losses.
30. Last I saw was 20.
Yeah, 30 billion and going. And from what I understand, that there's more liquidation that needs to happen. So expect to see some more big block trades and expect to see more losses out of Nomura at least.
Yeah, it's been a while.
Credit Suisse.
It's been a while since we've seen a fund blow up like this. Fund blow. I mean, we just saw a fund blow up a couple weeks ago, but it's been a while since we've seen one kind of go like this. The last one I can think of probably happened around the financial crisis. But
yeah, I was going to say, after the financial crisis, there were a lot of more regulations, a lot of more, scrutiny at this kind of risk taking. So, yeah, it's really interesting. It's interesting to me that we found out so quickly, that we had these mystery block trades, on Friday, and that, come Monday, we kind of already have an answer, which is great. Someone asked in the chat, which fund is this? It's Archegos Capital Management.
Yeah, it's a family office, which means it doesn't run outside money. This guy is managing his family's and his friends' money. And now they have a lot less of it.
Yeah, they do. From Bill Huang from former Taiga Asia.
Yeah. So newbie here is Viacom a buy. Well, so Dara, if you missed our pre-market prep show this morning, I recommend go back and watching. We did discuss this very thing. Here, let me pull up Viacom here. So there is some forced selling, right? There's a lot of selling happening right now in Viacom. Eventually, all these banks that are doing the selling, they're going to be done, right? They're going to get through all the supply of shares they have to sell. They're going to get them all off of Archegos books, right? Eventually, they will be done selling. We don't know when that'll happen. Only Nomura and Credit Suisse, right, and Goldman and Morgan, only they know when they're going to be done.
Yeah,
getting through the millions of shares that they are selling on behalf of their client. When that happens, it is very normal to see a stock go up after the selling is complete, after all the pain has been extracted from in this case Archegos, and all their shares are gone. Then the stocks it's not unusual. In fact, it's very common for stocks to just start going up once that selling is done. But we don't know when that selling is done. That's the catch, right?
Yeah, I'd wait to see. It's early. It's an early trading day today already. I'd wait to see throughout today if we get more reports of these block trades. We haven't seen any yet, but we didn't start seeing them on Friday until around noon, and then it was pretty much noon through the close on Friday when we were getting those reports. So and we also don't know if we're going to actually get reports of those. I'm assuming that someone at the banks, someone at the banks was seeing these and basically, leaking them out there and getting them out onto the books because they weren't, because there was no other explanation for Viacom halted down 40%, on a Friday.
Right. So I feel pretty confident in saying yes, Viacom will spike.
Yeah.
I just don't know when. Like, is the selling done now at 44? Is it going to be done at 40? Is it going to be done at 35? We don't know when they're going to be done. But whenever that happens, you will see a spike. I'm sorry I can't be more helpful, but that's sort of the catch here. We'll have to wait and see. This
is going to be an unfolding and developing story throughout the week.
Yes, yeah. And to Steve's point, it is unusual that we got an answer so quick. I was expecting to have to wait a few days or a few weeks, but we got an answer over the weekend, which was nice.
Yeah.
And then George Gotch is pointing, all the banks are going to be down this morning. All
yep. Financials down big today.
Now you could just go to the XLF, which is the ETF, which the whole thing is down. So yeah. All right. That's going to be that was our big story of Friday. It's going to be our big story to watch this week is in the market. It's just because not every day you get a liquidation like this. But that being said, Steve, what else is on your radar here?
Well, I was going to ask what the chat has going on. I'm going to pull up our economic calendar and see any big catalysts we have coming up this week. But what is everyone else looking at this week? Because I mean, honestly, that was kind of the captivating story for me.
Did you see Visa today?
Oh yes, Visa. Yes, of course, of course. Yeah,
Visa's a financial, which means it should be in the red if it trades with the rest of the sector, and it is, but only
it's flat today.
About a nickel, right? It's pretty flat today, and so why is Visa holding up relative to the rest of the sector? And it's crypto.
Yep, it's crypto. So they had a press release this morning. Visa is allowing payments to be settled with crypto using the Ethereum network. So they're basically starting to roll in Ethereum into their entire payment network, which is very, very bullish for crypto and probably Ethereum in general. Let me see what Ethereum. Ethereum's up almost 7% today.
Visa just went green for a hot second. So what about? Let's look at MasterCard here. MasterCard trading down. MasterCard is down with the rest of the sector, and then AXP is the other one, American Express. So
yeah.
That's good. They go ex-dividend in 2 days. It's good to know. So Visa holding up here this morning relative to the rest of its peers, and that is that we feel pretty confident saying is solely due to this Bitcoin pilot program. So again, how's it going to work again?
So they're using what's called a stable coin cryptocurrency, and so basically it's pegged to the dollar, and it's just like I mean, I don't know exactly how it works. Do you have more insight into how it's going to work?
No, I was hoping you had. All right.
I don't.
Okay. Well, someone in chat knows how it's going to work. I want to know if you're going to be using this Visa network. Then let us know.
So I do have a few more details though. They've partnered with the exchange crypto.com, and they're expecting to add more partners later this year.
Okay.
So expect to see more crypto news out of Visa, and expect to see more crypto transactions available through Visa.
Okay. We had a question: why is gaming all down? Now I don't know what gaming refers to. Does gaming refer to like traditional gaming, like casinos, or does it refer to like esports? That's what I don't know. Be more specific.
Well, Caesars is down 3%, so I'm assuming it's
All right, so let's see here.
LVS is down. Yeah, I'm assuming it's
I mean, okay, so look, let's just zoom out here for a second, right?
Mm-hmm.
SPY is down today, okay? SPY is down about 2/3%. The NASDAQ is down about 0.75%, and the Russell is getting smoked today, down to about 2.25%. So that's your bogey. Anything that's down less than that is up relative. Right. So what's Win doing here? Right.
So Win is down.
Here, let's zoom out. These stocks these are all like value stocks, and they all had big runs for a couple weeks there. Right. Like look at this run in Las Vegas Sands. Right. Like Las Vegas Sands doesn't move like this.
This was a reopening run, I think, because Cruise is down right now, but Apple, Netflix are up. I think it must be this might be a rotation from reopening back into tech a little bit. Maybe people are just realizing that we're going to reopen. It's just going to be a little bit. I mean, we've also saw the CDC last week extended the pause in cruises much later than the cruises expected to.
Yeah.
But I mean, Caesars actually said that they're going to today they had a press release that kind of surprised me. They're going to open up the Penn and Teller show in Las Vegas in April, which is kind of weird. I mean, I don't see how that actually happens and opens up. Yeah.
What about MGM here? MGM is so they're all going to be down between 1% and 2%. So that's interesting. I didn't hear that Caesars news. So
yep.
So then the obvious question then is, look, we all know the reopening is coming. That being said, we don't know exactly when, and you have to consider what's already happened with the stock. Like MGM, for example. I mean, if you're buying it now, it's up. Like let's just zoom in and look at the last few months. Like since when? When's that? November, December? I mean, it's gone from 20. It doubled.
Yep.
In 3 months. It doubled
on the vaccine distribution reopening. And so there's some profit taking. There's some rotation. People are realizing maybe people aren't going to be going back to the casino full full send, until later this year, maybe early next year.
I think, as usual, the market got a little bit ahead of itself.
Yep.
And the market. Everyone likes to say, "Oh, the market is efficient. The market is forward-looking." Well, yeah, sometimes it's too forward-looking. I think that's maybe what happened here.
Another one last pin in that is that Jets, the airline ETF, is down 1.5% right now. So airlines, another reopening play, down, probably a rotation into other.
Penn National coming off hard to down 5%, but this thing also ran a lot.
Look at that.
So, look, you get what you pay for. If you own volatility, own it on the upside, own it on the downside too. All right, Steve Krause is Benzinga's news master general. You can find him on Twitter at Steve_Krause.
That's me.
That's him. Thanks a lot, sir.
All right, have a great week, everyone.
All right, it is 11:01, which means SPAC's attack is here now.
How we doing, traders? How we doing? Welcome to the SPAC's attack, where we talk everything SPACs. And if you like my SPAC attack, let's go ahead and hit the like button. Let's get started. Let's bring in my man, Chris Ketchy.
What's happening, Mitch? How we doing today?
What's going on? Finally, the SPAC's attack is here. I know. Trust me. I feel the same way. Smash that like button. Let's get started. How we doing, Carl? How we doing everything? Hey, how we doing, Nate? If you're new to the show, say hello. One of the things is we've built up quite a community here, guys. So definitely, if you're new, say hello in the chat. I'm sure you'll get some hellos right back, and we'll definitely give a shout out. But of course, there's some great headlines out there. A lot of stocks moving. So let's go ahead and let's get into our headlines for the day. So definitely, guys, let's get this party started. Let's take us back.
All right, guys. Yeah, Monday here on SPAC's Attack. So we do have 2 new deals announced this morning. And then also lots of headlines to get caught up on from the weekend. So up first, a couple merger votes that were set last week that I want to remind everyone of and add to our calendar. We have DMYD voting on that merger with Genius Sports. That vote has been set for April 16th. We have NGA voting on their merger with Lion Electric, setting a vote date of April 23rd. I do own shares of NGA. So we'll add both of those to our calendar for the month of April, which is coming up real fast here. SFTW, which is one of the space-related SPACs that we've been talking a lot about on the show, merging with Black Sky. That company getting a lot of news. So they, of course, talked about those 5 satellites that they will be launching with Rocket Lab, but then also they shared images of the blocked ship in the Suez Canal from its satellites. So kind of showing off the technology that they have from those satellites from space, how they can pinpoint, with accuracy. So I think that's a key catalyst for them going forward, really showing off that technology with an event that obviously the whole world was watching. So keep an eye out on SFTW moving forward. And ALTU, so ALTU has been rumored with Ariane, a hypersonic company for a while in a SPAC deal. So a tweet from Ariane lists today's date, March 29th, implying some news coming from the company. So they did not announce a merger this morning. So maybe we get some news after hours, or maybe we get some news throughout the day today. Again, this doesn't necessarily mean that SPAC deal will be announced today, but news worth watching from Ariane, a company rumored to go public via SPAC. Arrival, new ticker ARVL, getting to ring the opening bell this morning. So again, we talked about this one, last week. They completed that SPAC merger, and then shares were down. This is a electric van and bus company. Keep an eye out on this one, on that dip now. Then former SPAC, we have Clover Health. So Clover Health now down 5% today. Some news out from the company, and this actually relates to that short report that was put out by Hindenburg. So Clover has announced that they are selling a brokerage firm run by its head of sales. That was part of the allegations from the company that they worked hand in hand. So the head of sales is divesting his stake in the brokerage, B&H Assurance, thinking, that there may be a potential conflict of interest. This was a downline agency that helped with Clover Health. So to me, this isn't a great sign that they're, part of that short report was saying there was a huge conflict of interest. Clover Health came out and said, no, there's no conflict of interest at all. And then today we're getting that announcement that they're divesting that division that has the connection to one of their executives. So shares down 5%, and this one is still in the $7 range. So not a lot more to add to Clover at this time. We have PSTH, that's Pershing Square, the Bill Ackman SPAC, widely followed, the biggest one out there. News out today that the company has said they will not announce a SPAC for the first quarter as originally, projected. Obviously, that quarter set to end in a couple days. So PSTH shares are down on that news as they will not come to terms with a merger target in the first quarter. So keep an eye out on PSTH as you may have a buying opportunity on that dip today. Looks like shares down about 3% to 23.60 at the current time. We have a couple SPACs on watch tonight, BFT being the big one, merging with PaySafe, but Bill Foley set to appear on Mad Money tonight. So he will probably be talking PaySafe and then some of his other SPACs. So keep an eye out on the Bill Foley SPACs as they trade throughout the day today. And we'll see what he has to add on Mad Money tonight about PaySafe and maybe some of those other announced deals or current SPACs searching for targets. On Friday, we had two new deals announced, BOWX with WeWork. Shares ended the day up 20% on that deal announcement. And then we had SV, that indoor farming deal. Shares ended the day up 2%. So, both deals announced from Friday getting a positive reaction. And then turning to our deals here. So we have Ajax, AJAX, which I do own shares of. They announced a deal with Kazoo, that is the United Kingdom's leading online car retailer with a fast growing presence in Europe. So they see revenue of 698 million euros in 2021, 2.1 billion euros in fiscal 2022. So that roughly translates to 963 million US for fiscal 2021 and 2.9 billion for fiscal 2022, being done at a $7 billion valuation. So Europe's used car market, $700 billion market, less than 2% currently online. So they believe they can use digital transformation to gain market share there. They have a subscription model, brand and vertical infrastructure in Europe. So it's not just UK. They also have operations in Germany, France, and Portugal. So huge opportunity here for them. They have over 20,000 cars already delivered in the UK. Again, getting close to $1 billion of revenue this year, which would be up 300% year over year. This one was surprising with the Ajax team, but this one was rumored for a little while. But I'll be watching shares of Ajax today. Again, I do own shares of Ajax. The used car SPACs have not fared as positive. We had SFT Shift and CarLots LOTZ, both trading under $10 now. So keep an eye out on Ajax to see where we end the day at. And then our other big deal this morning, we have ticker CMIIU, so still in units. Soma Logic, a leader in the proteomics field, is going public with CM Life Sciences 2, valuing the company at $1.2 billion. This $375 million pipe include SoftBank, T. Rowe Price, Illumina, Novartis, and ARK Invest getting in on another SPAC pipe deal. So keep an eye out on this one. Company uses artificial and machine learning. They're a leader in their field with over 300 industry partnerships and customers. And they have a pioneering technology platform, so they can measure over 7,000 proteins in a single sample. They say that they offer the only stack able to solve the comprehensive market need. According to that presentation, they have a first mover advantage, a large customer base, and 10 times the size of data than their next largest competitor. They see growth coming from their technology development, new product offerings, expansion of commercial infrastructure, pursuing additional health system partnerships, and delivering universal solutions to more customers. So they call it a $90 billion total addressable market, which compared to $70 billion for the genomics market, which of course we've seen the ARK Genomic Revolution ETF in that industry get so much attention. But according to this investor presentation, this is an even bigger market. Revenue of $55 million in fiscal 2020. They see revenue growing at a compounded annual growth rate of 40% over the next 5 years. 65 million projected in fiscal 2021, 85 million in fiscal 2022. They also see expanding high margins in the future. So shares of those units were up 12% this morning to around $13. Keep an eye out on this one. Again, some big investors behind this. And then also ARK funds getting in on this pipe deal. So keep an eye out going forward. And then we turn to our calendar. As I said, we got a couple of vote dates set for the month of April. We have April 1st this week, NPA voting on that merger. And then tonight, we have earnings from 3 former SPACs. We have tickers BFLY, that's Butterfly Networks, DNMR, Danimer Scientific, and GOEZ, Go Easy is Canoe. So keep an eye out on all these earnings from these former SPACs. That's what I've got for headlines and those 2 deals, Mitch.
Yeah, man. Yeah. Hey, as you guys can tell, things are moving around here. Let me go ahead and fix my audio here. Barely able to hear you. All right, there you go. Fixed. All right, there you go. All right, so let's go ahead and let's get into our watch list for the day, guys. I want to take a look at see what's moving, what's out there. Definitely let us know if anything stands out to you guys, and we'll get into that. All right, let's go ahead and let's get into our watch. All right, guys. So as you can see here on our watch list, first up, Ajax here on the left, getting a deal, but still not getting the love we expect to see from these announcements. But let's go ahead and take a look at maybe another stock or two here. Seeing BFT, it's holding on that 15. I don't know what's going to happen after this, when we switch on over. Honestly, this one's got me a little bit concerned. I know that a lot of people are stuck in this and just waiting for an up move, but at the same time, it could crack that support and also come crashing down towards that 12. So definitely be careful with that one, BFT. But like we said, it's going to be on Kramer tonight, so it could get a little Kramer pump. We'll see what happens here. Chris, what do you think? That's an important level, right?
Yeah, definitely. And, BFT is one, that's been very popular for a while. When that deal came out, it was widely followed. It's one we get asked about all the time in the chat, right? So very popular one out there. I think you're right. I think a lot of people are still stuck a little bit above this level. But I'm curious because Bill Foley he's done a couple SPAC deals and he has a couple existing SPACs. So the question is, what will be the main topic with Kramer tonight? How long is his segment? Will he be able to talk about each one of his names? Will he have to pick, one to really center on? Is there one that Kramer really wants to hear a lot about? So, we could see BFT get the pump, or it could be a completely different SPAC in the Bill Foley family of things. So, interesting to see. And again, shares are up 3%, probably just based on the fact that they will be on Mad Money tonight. So maybe that pump is already built in here. So we will see.
Yeah, one thing to kind of worry about it is the thought, are we getting towards the bottom, or are we getting towards, let's say, a time where they're just going to come out of favor? I think personally we're getting towards a bottom. And one of the things that I've been paying attention to is you're starting to see the hype traders leave the market. And with that, we can get some balancing out. I think you're starting to see the day traders stop looking at these. And with that, we might be able to get some levels that start holding on. So I'm definitely paying attention to it. One of the things is there's always kind of that craze phase. When they go away, can we start getting some balancing, some profitability? Actually, looking at what I've been looking at is the evaluation phase. Some of these companies that have already switched over and de-SPAC'd, getting some love. So I'm going to be paying attention to those. One of them could very much be that B-Fly. We know how Kathy likes this one, switching over from long view. The question is, when does the evaluation come into play? I think we find out a lot about that with the earnings call. And then from there, we'll be able to take a look at this one and start looking at the evaluation, seeing if they're matching up the stock.
Yeah,
what do you think with that, Chris?
Excellent point, Mitch. First on talking about the market, I think the key, is stability, right? Let's get rid of, some of the day trading, some of the hype, those huge pops at 4 a.m. or 6 a.m. on these deal announcements. Let investors be able to read those presentations and see if it's a deal that they want to be in long term, and not have to make that decision on a 30% pop. Just from the deal being announced. So, and then also we're seeing less SPACs maybe finally enter the market. Mitch, I know you said it on Friday. It was the first non-Monday that had no new SPAC IPOs that day, which is a positive sign. There were actually 2 that were pulled that were supposed to go public that day. So to me, that's a positive. I do think there's, too many SPACs coming out at too quick of a period, that they need to be spread out. We need to get some of these existing SPACs to announce deals, or we're going to see, too high evaluations, and we're going to see too many of these SPACs trading under that $10 level, which is not what we want in this market. And then as far as Butterfly goes, yeah, spot on. Let's get those earnings out. Let's hear from the company, how they're, going about after completing that SPAC deal. Again, this is a favorite of Kathy Wood's in the ARC Genomics. It's a portable ultrasound. I want to hear, do they have new partnerships to announce with hospitals? Do they have new technology to announce? How is this platform growing? And what do we have to look forward to Butterfly in the next fiscal year? So that's the one I'm the most excited about from those earnings tonight. But we do have 3 former SPACs all reporting after hours today.
Yeah, we're going to definitely keep an eye on those. There's a bunch moving. I'm still watching to see what happens in a couple of these plays. There's a couple that are definitely on my radar. One that you mentioned in your headlines that is one that I'm definitely watching, guys. I did some deep research into this company, and I'm going to be coming out with a video probably later on in the week explaining a little bit more in my deep research. But that's Black Sky, guys. And you guys know how much I am about my contracts and about revenue in these SPACs. So if you haven't taken a look, maybe you do some due diligence before I even get out the video. So I wanted to tell you guys a little bit. Check out that Black Sky. Look in the investor presentation and look into revenue. Tell me what you see. Let me know. Hit me up, Story Investors on Twitter. We'll let you know. I'll also give you a little bit insight how I did a little bit more deeper research into this company by looking at their partnerships and kind of their customers that they have. But you mentioned it, Chris. They're showing off their technology a little bit there by showing off their imagery, and I think it was a smart move. What do you think, Chris?
It was so smart, right? Talk about good timing. They just launched that additional satellite aboard a rocket lab, rocket last week. They already have shared images from that satellite showing how quick they can get into place and really get operations going. They announced that deal with Rocket Lab for 5 more satellites later this year. And then, so everyone's talking about the Suez Canal, right? And that ship that's stuck. all the memes you see and the majority of those pictures are from the ground, right? And we see the pictures of the boat stuck side to side. We see that crane that came in, digging in the sand. But then the smart companies here like Black Sky are the ones showing the satellite images from above. So then you can really see, how many containers are on that ship, how long is the ship, how is it stuck? You can see the ships waiting behind it. You can really see the big picture. So to me, that was a key for Black Sky here to really get their name out there, and maybe pick up some, orders out of this whole ordeal. So, again, good marketing and good sense of urgency here by Black Sky, in my opinion.
Yeah, guys, I'll go ahead and I'll get you guys that video in the next couple of days. But let's go ahead and let's get into the fun time here. Let's get into our interview. I know there's a lot of people waiting for this one. So, Chris, let's go ahead. Let's bring on our guest here.
All right, guys. Yeah, so on today's show, joining us is Mike Murphy. He is a financial market analyst and the CEO of Rosecliff Capital. So welcome to the show, Mike Murphy.
Thank you, guys. Happy to be here. Coming in hot from Miami. So,
oh, my hometown. I grew up there. So, hey, enjoy the beach. I'm missing it over here in the mountains in Colorado, but you enjoy that beach for me.
Thank you.
All right.
Yeah, you got one of us from Colorado and you got me from Michigan, where we actually had some flurries last night. So, Miami definitely sounds a little bit warmer and, like the place to be right now. So,
It is.
So Mike, let's dive into some questions here. So, wondering if you can give our viewers some background information on yourself in the financial industry.
Sure. So I've been in the financial services industry for about 26 years. I started my first firm, which was a registered broker-dealer, trading, small banking, and wealth management company back in 1999, and ran that for about 20 years. Post 2008, it was probably around 2011, 2012, I started angel investing. And that was it started out with friends and family, people I knew coming to me and saying, I have this business, if you'd like to invest. After a few years of doing that and meeting some great people along the way, I realized that the returns I had in my angel portfolio were great. So I thought about building a business around it. So 2016, we launched Rosecliff One, which was a small $20 million venture capital fund, seed stage fund. And we had some great success, luckily. I had a great team that I built behind me, and we were able to invest in some great companies out of that fund. So we saw good success, led us to Fund 2, which was $75 million. Fund 3 the next year was north of $200 million. So now as we sit here, we have about $900 million in assets across 7 different funds. And we invest in private companies throughout the entire life cycle, from pre-seed out to pre-IPO. So we're involved in the company every step of the way, which I think is a big advantage to us. Back about the end of last summer during the pandemic, I had 4 or 5 of our portfolio companies that came to me and said, we've been approached by a SPAC. What do you think? So looking at what a SPAC was then or what a SPAC is now, I thought it is a great exit opportunity for the right business, for the right company, if it's the right SPAC. And I also thought with all of the companies that I meet through my firm on a weekly basis, that it would be great to have that vehicle ready for the right time and take the right company, private company, into the public markets. So I said, though, I'm a big believer in team. I'm a big believer in investing in the people behind the company. So I said, if I was going to do this, I would want to do it with a team I would invest in, a team I believe in. So I went to 3 of my friends, guys who I'd known for years. One was Jordan Zimmerman, who's a self-made multi-billionaire marketing and advertising guy. And then I went to a friend, Kieran Goodwin, who I've probably known for going on 12, 13 years now, who was the head trader at King Street, a $23 billion hedge fund. And then he launched his own $2.5 billion distressed credit hedge fund after retiring from King Street. Last and definitely not least was a guy named Brian Radecki. Brian has great operational experience coming from, he was the CFO at CoStar for 17 years. When he started at CoStar at about 20 million, he left at about 25 or 30 billion dollars. So he had done a lot of acquisitions with his public stock, and integrated a lot of companies into CoStar's growing business. So I thought, man, if these three guys saw my vision and wanted to do this, I think we could really make a difference. That's a team I would want to bet on. And luckily they did. And Rosecliff Special Acquisition Corp. 1 was formed. We started trading about 4 or 5 weeks ago. And it's been an interesting 4 or 5 weeks, but we've met some great companies along the way.
Awesome. So before we dive into that SPAC of yours, I know you've invested in several private companies. One of them actually announced a SPAC deal not too long ago. So Wheels Up. So Wheels Up is going public with ticker ASPL. Can you give our viewers kind of the thesis behind investing in Wheels Up? What's the growth look like? And, was it smart of them to get a SPAC deal to go public, at this stage in their life?
Yep. So, I mentioned a couple of minutes ago that I really believe in investing in team. And, the founder of Wheels Up is a guy named Kenny Dichter. Kenny and I have been friends for a very long time. I was actually involved with a few earlier deals that Kenny was involved with, Marquis and Avion Tequila. So I've seen Kenny build Wheels Up from day one. We were first money into the company. And so the team that he's from what he started 7 or 8 years ago to what it is today is just, it's been a phenomenal growth story. The team he's built around I think it was a right time for them to go public through a SPAC. So I think so many, his big story is the democratization of private aviation, or he wants to create the Uber for the sky. And the partnership that he put together with Delta really gives him that opportunity, because now people, top level Delta flyers can use their frequent flyer miles on Wheels Up and vice versa. And if you look at the SPAC that he did, I think he probably had several offers on the table, but I think he strategically, or his team strategically decided to go with these guys because of their experience in luxury goods brands and also their experience in Asia, which could be a huge growth sector for Wheels Up. So although the stock hasn't traded well since the announcement, it's a long-term story. And the PIPE investors that he has in there are investors that have been along the ride with him for a very long time. They're people who believe in him, believe in his team, and believe in the long-term story. So yes, it was the right time. Yes, it was the right partner. And I expect a lot. Once that ticker flips over to UP, I expect a nice move by Wheels Up.
Awesome. Yeah. And great ticker there of them to grab UP. We talk about tickers sometime on the show. That's part of the fun here with some of these SPACs is you're able to, go from that SPAC ticker that not a lot of people know to all of a sudden, a ticker where it really describes your business. So UP, Wheels Up here. So let's dive in then. You had some of these private investments and then you launched a SPAC. So we have Rosecliff Acquisition Corp. 1, so still trading as units, RCLFU. Can you walk us through this SPAC and kind of the target areas that you're looking for with a merger deal here?
Sure. So, back to the team again, I think the low-hanging fruit here for us is consumer tech. But when I use that term very broadly, consumer tech, obviously direct to consumer, but aside from that, there's also fintech. There's also insurance tech. There's also health tech or telemedicine, if you will. There's also just straight software deals. So when we say consumer tech, we're looking at it in a very broad sense, in that anything that you, the consumer, would be sitting at home and using. So it's not narrow, but that's by design, because again, we meet a lot of different companies in a lot of different sectors. But the one thing that all of the companies we're speaking with will have in common, it's that it's a team that it's a great private company run by a great team that looks at me and my team and says, hey, I want to partner with those guys because they can obviously take us to the public markets. But then looking out 5 years, they can help us become a 15 or 20 or $25 billion company with their expertise in marketing or expertise in public market financials or expertise in dealing with Wall Street and getting the right analyst coverage. So it's going to be a team that believes in us as much as we believe in them. And we're looking at a true partnership and not a pop to 12 or 13 on an announcement, but really a long-term differentiated company that 5 years out can be worth a lot more than where it is today.
Awesome. So, you hinted at it with Wheels Up a little bit, not trading, as well after the deal. You just said, with your own SPAC, focusing on that long-term plan with whatever company you acquire. So obviously SPACs, huge story in 2020. We saw these huge pops, and now in 2021, we're getting more normalized around that $10 level. What's your overall thoughts on the SPAC market for 2021? Do we have too many SPACs out there? Are we going to see, some not complete deals? What is it going to take to maybe bring some more stability to the SPAC market that we had in 2020?
I think you're going to have some bad deals. I think you're going to have some deals fall apart. I think you're going to have some SPACs fail. Are there too many? I'll say, quote Bill Parcells, when they asked him if his team was better than 8-8 with the Giants, he said the record doesn't lie. So we have as many SPACs out there now, 600 or so. So that's where we are. But now they will be chasing companies. So there'll be some deals that are done that aren't priced correctly. So some of these things, as an investor at home, you can't just buy a SPAC because it's a SPAC any more than you can just buy an IPO because it's an IPO. There'll be some going to public markets, and there'll be some failures. And to me, 26 years in the public markets, that's the way it's always been, and that's the way it should be. But I think the reset that we've seen here recently is actually very healthy, because now looking at most SPACs priced around the $10 range, it's getting away from the hype that was there, where people were chasing companies. Individual investors, for the most part, were bidding up certain SPACs on the idea or hint or rumor of who they may merge with. And ultimately, that's not a game that I think individual investors are going to win. So really, you guys were touching on it earlier, that investing in a SPAC is just like investing in a microchip company or a grocer, or pick a company, pick a sector. It's really investing in a company that's going to fundamentally hit or exceed their projections that they've given to Wall Street. So it's the hype, I think, can, if anything, can hurt people, because it can get them into a situation where they're chasing things based on the hype and the FOMO, fear of missing out, rather than actually fundamentals. So I think, long story short, though, you have a lot of very talented people with a lot of great experience in the SPAC market. So I think it's going to be a great conduit, a great mechanism for private companies to come to the public markets where people can invest in them.
Awesome. So, you saw Wheels Up, one of the companies that you invested in, go public via SPAC. You were an investor in Casper that went public, a traditional IPO. I'm guessing on a case-by-case basis, but you as an investor in some of these private companies, how do companies, look to weigh the pros and cons of a potential traditional IPO versus a SPAC? What are the benefits in your eyes, and, how do companies look at that behind the scenes?
Yeah, so I think some of them just simply, some founders believe that, hey, I'm a strong founder. Strong means traditional, so I'm going the traditional IPO route. We're better than a SPAC. And I think that's some people are going to have that mindset. But as SPACs have become more and more mainstream here recently, I think people are realizing that it can be a faster process. And for companies that are in the high growth stage, they get the benefit by going through a SPAC. You can talk about your projected earnings. You can talk about your earnings for next year, the following year, the year after that. Whereas the traditional IPO, you're talking about your earnings you've already booked. So for companies, and we can talk EV, electric vehicle sector for one. they've talked a lot about projections, and that's been able to get them valuations through the SPAC market that they would never have gotten through the traditional IPO market. Now, there are going to be some electric vehicle companies that fail, that don't do well, in my opinion. There are going to be some that are a rocket ship and look to compete with Tesla or have Tesla type returns. So investors are trying to bet on which ones are going to be the winners and which ones are going to be the losers. But I think for the most part, if a company you're going to start to see founders weigh traditional IPOs and SPACs in a different way, meaning that some may see a value in going public through a SPAC versus a traditional IPO, and it not simply on the projections, but it could be over time. It could be for the support that comes with it. So, and it could just be that now they are accepted a lot more. It's only a few years ago where SPAC was a 4-letter word for the most part, and now it's becoming a lot more mainstream as you see more great companies hit the markets through a SPAC.
Perfect. Guys, again, we're joined here by Mike Murphy. He's the financial market analyst and also the CEO of Rosecliff Capital. So the SPAC from Rosecliff Capital, we have RCLF in units right now. I do notice that at the end of the name, of course, Rosecliff Acquisition Corp 1, is that strategic? Are we going to get more SPACs, from this family of Rosecliff here?
I think just being as transparent as I can be, I would say yes, that's in the plans for the future. And the reason for that, again, is that, I thought about when we put this team together, I thought that we could put together a team that could really help great private company teams become great public company teams. And now that we're in the process of doing it, I'm certain we can. So I think I would love to do more SPACs for, yes, it's a lucrative proposition for us as the sponsors, but also it's a great opportunity to take a private company and really help them become a public company, help them become a great public company that we can be talking about as a potential S&P 500 business at 5 or 10 years down the road. So that is really motivation for us to keep doing what we're doing now.
All right, so I'm going to go ahead and jump in here with the question of my own. So one of the things that I've been noticing is how SPACs kind of have gotten smaller and smaller in size. Do you think that in the long run it is because of the actual supply out there for companies that they're able to acquire, or do you think this is just a matter of just kind of a wave in the supply and demand, and we should see it kind of pick up?
I think both. So they started out from my seat. They started out small and just got bigger and bigger and bigger, and that was more of that. Hey, I'm better than those guys. They did 200. Let me do 250, and then the next guy wants to jump to 3, and then we're up at 750 or $1 billion. Just because you can do it. You're showing that you can actually raise more money than the next guy. So we went from there, and then the pendulum swung in the other direction, and we're getting smaller deals. But one thing, we've seen the pipe market really slow down a lot over the course of the last few weeks. And if you're going to do a deal where you have access to a very robust pipe market, whether you have a $200 million SPAC or a $500 million SPAC, doesn't really make a difference, because as long as you have the pipe investors behind you, it actually, you could argue it's a better deal for a company to have a smaller SPAC up front and less dilution and a larger pipe on the back end. So, I think it's just a sign of the times. I'm sure they will flip back the other direction at some point too. But I think the one kind of underlying premise here is, a lot of times we hear about, SPAC bubbles or, SPACs overheating or, too many SPACs. And, I'm not, could be, but there are going to be great businesses that come to the public markets via SPACs. And there's not going to be one, there's not going to be two, there's going to be several. So I think that's really, I think it's great. It's only a few years ago where I was on television talking about how there were so many large deals happening in the private markets, Uber, Lyft, SoftBank coming in and writing these big checks, that no one would go public until they were $50 billion businesses. And therefore, the individual investor at home was missing out on owning the upside in these great companies. Back in the 80s, when you had companies like Oracle and Microsoft and Apple go public, they would usually go public at around $100 million market cap. So you as an individual investor could invest and partake in the upside of these companies. Whereas now, when you move forward, so many companies were staying private longer because they could get the large $5 billion round done and they didn't have to go public. Well, now things, as they tend to do, have shifted the other way. So it's no longer staying private too long. It's now, the argument is too many companies coming public and maybe coming too soon. Could be, but you're always going to have, in the markets, you're always going to have excess one way or the other. And it's really, I think, if for investors, if they take a long-term approach to this, they're going to have some great opportunities.
Yeah, I completely agree with you. One of the things is, you are getting a chance to look out into future growth companies, with some opportunities that we just don't get. And if we do get it, like you mentioned, we get it at such a high premium that it usually knocks out the usual everyday retail investor. Yep. And so definitely that's on my watch. Just to kind of clarify for our viewers out there, Michael, what is the market cap in your SPAC?
250 million, 253 to be exact.
Perfect. I just wanted to give everyone out that information here. The last thing I have is definitely, I'm going to be keeping an eye on these. One of the things that I like to do is I put the SPACs in different kind of baskets, sometimes in a long term, sometimes in a hype basket. One of the things that I think you're mentioning is, that we're starting to see a lot more that long-term basket is getting bigger. And if you really start looking at the revenues over time, and especially the growth, let's say if you're looking out towards, let's say 2024, 2025, you can really have a possibility to grab a great growth company here at a cheap evaluation.
Exactly. Absolutely. And really, that to me is the way it should be. And really, as a company, you need to execute. So I want to bet on the team. I want to bet on the company. And if you don't execute in the public markets, it could be if Apple misses their earnings or lowers their guidance, the stock's going to get hit. And it should be the exact same way for a SPAC as it would be for an IPO. So you have an opportunity, but realize when you're investing in a company that's a $2 or $3 billion market cap, it comes with a lot more risk than investing in a $2 trillion market cap. So, but along with that risk, you're betting on the upside, you're betting on the reward. So just the only thing I don't like for individual investors is the hype. I think that the hype that comes around names and you get a pop, a lot of times I think that comes with an inevitable holding of the bag. Somebody, there's one person left without a seat. And I don't think that's necessary for people. You said earlier, do your homework. If people do their homework and look at companies and they're investing in high growth stories in high growth sectors that are meeting and exceeding their earnings expectations, they don't need the hype. They're going to do better if they do that than trying to chase the next hot thing because you heard someone talking about it online somewhere. So.
Definitely would have to agree with you. That's one thing that we definitely have been mentioning is that, if you really look into the kind of the investor deck, look into their revenues, look at their projections, see if these projections can kind of match up really kind of what you see could actually being coming forth in the next couple of years. And then also one thing that we've mentioned often, and we mentioned this, is look for those contractual or reoccurring revenues, because that's what's really going to stand out in the financials.
Yes, for sure. The money definitely helps.
It does.
Definitely doesn't hurt, right?
Well, right, awesome, Mike. We enjoyed your commentary here. I saw a couple people in the chat, talking about that Wheels Up deal, so ticker ASPL. But we're excited to hear more, from Rosecliff Acquisition Corp in the future. So, when that deal is announced, if you want to come on our show, let us know what company you're acquiring and why you're doing it. We'd love to have you back on, to hear more about that. So again, Mike Murphy joining us from Rosecliff Capital. That's RCLFU, still trading as units. Make sure you go check out that SPAC. So thank you, Mike, for taking time out of your busy schedule to join us on SPACs Attack.
Thank you, guys. It was a pleasure. I'll see you soon.
Thank you.
Definitely. See you again. All right, guys. Hey, you heard it once again on the SPACs attack. Go ahead, give me that thumbs up, smash the like if you got some value out of there. And one thing that I'd like to mention is that, he doesn't have that company right now. And so you see how he was approaching him. And when we talked about revenues, that's kind of like what he was looking at also. Think about what he's talking about here, guys. He's talking about a lot of things that you as an investor need to start thinking. The long term in the approach, the long term in the company that he's trying to acquire. It doesn't need to be a 100% knockout home run this year. It just needs to have some growth potential so that investors can see that potential in the long run.
Yeah, Mitch, my favorite thing from this interview and from this SPAC was you have Mike here, who is a investor, and he invests in every stage along the way of the company. So, when he talked about Wheels Up, they were one of the first investors in that company. So we talk about SPACs, we talk about valuation, we talk about not overpaying. This is a guy who knows how to value companies based on what stage in their life they are at. So I think that brings extreme value to this SPAC and getting a deal done. What do you think, Mitch, with that investment strategy?
Yeah, I mean, at the end of the day, we just got to keep an eye on what's going to happen in the next couple of weeks. Some people have called the bottoming action. Some people have called that SPACs are just dead. I can tell you right now, that doesn't make sense. For it to be dead, that would mean there'd be no money. And the money is still there. The question is, where are the winners and what are the losers? Now we actually have that question. Before, that question didn't exist. It just didn't exist, guys. And there was a point in time where you could have grabbed just about any SPAC that made a rumor announcement, and it went up 40, 50%. Now just isn't the case anymore. And so with this being said, the strategy needs to change, like Chris is mentioning here. And with that strategy being changed, you need to look at it. Look at some data. Look how the change is. Look at maybe companies that have de-SPACed maybe in 2020, 2021. We talked a lot about them on our match SPACness, and I'm looking forward to continuing that. So definitely stick around, guys. Tomorrow we'll be getting right back into our March SPACness and working our way into the Final Four. But hey, like we said, guys, watch for the data, look at the change. One thing I've noticed is the announcement pop just isn't the same anymore, even with the rumors. So what I'm looking for more now is, like was mentioned, is the evaluation phase, the ones de-SPAC, the ones that have some revenues, some ones that report earnings so that I can go off of it. If I don't got no earnings, then, I mean, what are you doing? You're just guessing. And that's what I realized. Right now, it's turned out to be not the guessing game anymore and more about the financials, meeting with the technicals. And that's another thing. You can't just buy them off the highs anymore. You got to be timing these correctly.
Perfect. So, Mitch, segueing from that interview, what we didn't get to in headlines that I think we should probably talk about, since we were talking about it all last week.
Well. I think it has a feeling to do with this.
All right, guys, let's talk ARK Space ETF, new ticker ARKX. We'll start trading tomorrow. You heard me talk about it last week. I even had an article out over the weekend, too, of 9 potential space SPACs that could be included in that ETF. But guess what? Wrong. Only one of those SPACs was included. This ETF took a different turn of events. In my eyes, it's not going to be a pure play space ETF as I think others thought it was going to be. It's going to be innovation as well. It's going to be companies that can benefit from connections in space. So, just want to throw this out here for you guys so you can see it. And the surprise here for me also is the second largest holding in this ETF is actually the 3D printing ETF, PRNT, which is another ARK ETF. So rather than owning direct shares of, Desktop Metal or some of those other 3D printing you have just the entire holding of 3D printing. So there are only 3 SPACs in this ETF. So we have former SPAC Virgin Galactic, that's ticker SPCE, which I own right there at number 20. So it is, yeah, I mean, number 20, 2% of assets.
672 shares there.
Yeah. So yeah, 2% of assets. So rather a surprise because she owns Virgin Galactic and one of the other, ETFs. And John Doe, I see your comment. Of course, why Netflix? That was my question. Why Netflix? Why Amazon? Why Google? The answer is in the description. It says companies that can benefit from connectivity. So when you think of people getting internet possibly from space, you can see how some of these internet companies could benefit. I think it's about a bit of a stretch personally. And then if you go all the way down to the holdings, there's 2 more SPACs at the bottom. We have Atlas Crest, ACIC taking Archer public. That's a electric vertical takeoff and landing company. And then number 39, Reinvent RTP, which is taking Joby Aviation public. So another electric vertical takeoff and landing. And then, Workhorse is in here because they have a drone division. Ruel, I see your comment. Why not HOL or NPA? That's a great question. I would love to personally ask Kathy, why no HOL? Why no Rocket Lab? Why no Black Sky, right? SFTW that Mitch is going to do that video on, satellites in space. Talk about connecting people. And then, Maxar, which isn't a SPAC, Mitch, that's one we've talked about before. Maxar is nowhere to be found in here. Momentous, SRAC is not in here. And then the new one, GNPK, which is a space infrastructure company, they're not in this either. The thing I'll note is this holdings is from March 26th. So it is from last week. It will go public tomorrow. Maybe we see a shakeup. Maybe we see some additions. There's 39 holdings listed here. The main page says that they're going to hold between 40 and 55 companies. So obviously, do your math. 39 is less than 40. So maybe we see some other companies added. But as today stands, this is going to be the holdings for ticker ARKX. Mitch, I rambled on a little bit. What's your thoughts on this ETF from ARK Funds and Kathy Wood?
Well, guys. I'm going to go here with my man, Keith. Is it concerning that the second biggest, largest holding is their own ETF? This is very, this red flags all over it, guys. Red flag. Ding, 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 ding. You don't do that. I'm going to let you know that right now, guys. I think in the long run, I'm going to call it here. If Kathy Wood blows up, it might be because of this ETF. I'm just going to say it. I got no ball. I ain't scared of saying it. She's going to blow up sooner or later, I think, with these strategies. I just don't see how you can be buying your own ETF as the second major holding. And then what happens when that 3D printing ETF goes sideways? What happens, guys? This one goes down too. And so I think at the end of the day, this is as bubble creation as you can get. One of the things that I do see that she does try to save herself in, and that's what she's including these other names like NVIDIA, Deere, Amazon. You know what that is? That's called balancing. That's called portfolio balancing. And so what that does is that starts killing what they call the market systematic risk. And that's what she's doing here. She's trying to take the systematic risk out of this and then grab some high growth names and then try to get the ETF to move up here. And so that's what I think she definitely targeted here. She tried to get some marketing balance. I've learned a little bit about this when I went to school, but it's something that you have to do calculations almost every single day for you to be on top of this. And so that's my concern. What is this really? I mean, what this is, it's a balanced portfolio with a couple names that have some growth and innovation long term. That's all it is, guys.
Yeah,
It's
yeah.
not the space ETF we thought it was going to be.
That's the thing. Where's the space at, right? So Wendy's, the old commercial was, "Where's the beef?" Right? That old lady, got on and said, "Where's the beef?" Kathy, where's the space, right? And I'm a fan of Kathy Wood. I like the ARK funds, but to me, it would have made more sense maybe to add space companies to the existing ARK innovation ETFs. But here you are launching a space ETF. And I can pull up, I don't have the fund holdings in front of me, but there's a space ETF already out there, ticker UFO. If you look at their holdings, it's going to be a lot more pure play, right? It's got, Boeing, Lockheed Martin in the top holdings. I think Virgin Galactic's in there. It also owns all the satellite companies, right? Maxar, Iridium, and other ones. Someone saying LMT in the chat, John Doe, Harris. Yeah, it shocked me this morning when I saw the fund holdings, and that was the route we went. And again, as the name implies and as her description says, she's perfectly able to go that route because she's saying space and innovation, and she's justifying why she's doing it. So it's not that she's not following her own strategy. I just don't understand the strategy here. And I was really hoping for a pure play space ETF. I do own several space SPACs in my own portfolio, but I would have loved to be able to invest in a pure play space ETF. So to me, maybe I'm going to look at UFO instead because, Mitch, you and I have talked about space. I see it as a huge growth market. And, I know you're all about, the satellites, the companies with contracts. I want that. I also want some exposure to maybe the space travel because I think, that can grow too. But satellites, right? And you want to talk connectivity from space and, Netflix and all this. Why is NPA not included? The 5G from space company. I think when they connect and they have that partnership with Vodafone to bring, 5G to emerging markets, talk about Netflix and, Amazon being able to gain more subscribers when they can get 5G in emerging markets to help their subscriber growth. I mean, I'm shocked that one's not included as well. So that's what I've got to say, guys. Again, we talked this ETF last week. We were fully prepared to talk about a bunch of space SPACs, that were included. And instead, here's where we're at. There's 3 SPACs in here. And, again, they're all at position 20 or below. So not even that heavy in here. So surprising move to say the least.
Yeah, we're definitely going to have to figure it out. We're going to have to reach out to Kathy, try to get an answer here, because at the end of the day, it just doesn't make sense for the investors out there. There's a whole lot of investors out there that were really waiting on this space ETF, trying to make investing decisions prior and trying to get some of these SPACs like NPA, HOL. There's so many, Rocket Labs, so many opportunities here that we thought were going to be included in this ETF and just were cut out. And so the question is, will they get picked up in the next couple of days, or will just this kind of be the strategy here? And there's a couple that definitely interest me. I mean, the fifth one here, JD.com, trying to buy China on the cheap. You see it also later on. What's the other name? There was another, 10-cent holdings there, 32nd one there. I mean, she's playing some value game here and some growth game. There's a little bit of mix, but it doesn't. If I read the top again, that's when you'll start being like, well, this doesn't make sense. But hey,
yeah,
that's why we don't run ETFs.
Again, guys, if you look at the date on there, it does say March 26th. This is straight from the ARK website, guys. This is from ARK Funds. This is not a doctored document at all. The thing I am seeing some people say on Twitter is that there's some placeholders possibly on this list. So there is a chance that maybe Kathy didn't want to get front run on some of the names in the ETF, which that would be a unique strategy, as she's very transparent, puts her trades out there, in that daily email. So I'm interested to see if this list changes at all tomorrow. if we see a dramatic change or if this is the list. So maybe that 3D printing ETF in position number 2, maybe that ends up just being a placeholder. But guys, this is from the ARC website. So as of now, that's what it says. So we're just going based off of that information. But I'd be happy to be proven, wrong, and that maybe this list does have some placeholders, and maybe we see one of these bigger names take a higher position. But again, just going by the list we have out there in front of us.
Yeah, it just kind of shows me and it kind of worries me in the long term. What's going to happen with this market? How long do we got the up move for? Where's the growth names? Is growth coming back? We are seeing the market bounce from that 393 back up there, almost to 395s. The question is, are we in kind of this melt up where we're going to just rip on back and the SPACs games are going to come back and we're just going to get a big move? Or are we going to get a downturn and we're going to get kind of the inflation hit, market come down, and we kind of go into sideways period for a certain amount of time? It's going to be interesting because we've been playing the game back and forth, whether we're going up or down. So, well, I'll definitely keep an eye out. Now it looks like it's time for the Power Hour. I see them getting ready. You already know, Chris, what's going on? What's up with Power Hour today?
Yeah, guys, so stick around. Again, we've got Benzinga content all day long. So I'm excited. We got Power Hour coming up. They always put on such a great show. We got Hot Stocks Luke here. They've got some exciting guests. I know they have Bull Trade Finder coming on today. So, we'll be hearing more from them. But of course, Luke will be sharing real-time trading ideas. Maybe he'll even be able to talk that ARC Space ETF, and we can get his opinion on that as well. So you guys don't want to go anywhere. You want to stick around. And I heard Spencer saying earlier, we've got content going so late tonight, Mitch. I don't know if you know what time the content ends. I know Ruel has a show tonight at 7. So this show is just getting longer and longer, right? So content from 8 a.m. with pre-market prep all the way into the night. So stick with Benzinga. Smash the like if you have not already. Make sure you subscribe and just stick around all day long to hear from some of the, best that Benzinga has to offer.
All right, guys, like Chris said, we're going to be having content running all the way until 9 p.m. So definitely stick around, guys. This is where we're at. Hit the like, hit the subscribe down below.